Let's bring on board the management of Ceat. We have Arnab Banerjee, who's the MD and CEO of the company, joining us right now to talk about the fact that they're expanding the Sportdrive Tyre range as well. Thank you so much, sir, for joining us this morning. And with 3 new launches, Ceat is actually entering the premium segment. If you could tell us what prompted this sort of a strategic move now, and how do you see the margin profile of this segment compared to your existing business, and also by when will it be available in India?
So I'll start from the last answer. It will be available, all these tires, starting with Mumbai in April month, but in all other towns through April and May we'll make it available. Run flat tire, the Z-rated 21-inch tire, as well as the Calm technology noiseless tire, all of them. Now the margin profile will definitely go up. The higher rim size tires, 17-inch plus, have a better margin profile. Within that, special tires like the Run Flat, like the Z-rated 21-inch and the Calm tires, they will have a better margin profile within 17-inch, which itself has a higher margin profile. It will take time for the volumes to grow because they are at the evolving end of the technology, but definitely plus for margins. 17-inch plus is what we define as premium segment in India, which are getting fitted into the larger vehicles, SUVs, which are traveling much more on the highways that are being built. So this is right now about 8 to 10% of the market, but growing very fast. And next 3 to 5 years, we expect this segment to grow to about 25 to 30% of the market. So it's natural for us to focus on this segment, not only for the margin profile, but also for volumes and to improve our competitive position in terms of market share.
Right, Arnab, since crude derivatives form a major part of the raw material cost for you, how do you expect the recent cooling off in crude to actually benefit you in the coming quarters? And also if you can quantify the impact.
It's very difficult to have a formula like that because the pass-through of crude happens through a number of derivatives, which then finally leads to the end price for carbon black or synthetic fiber or synthetic rubber, which we consume. And there's no direct correlation. We have tried to see the correlation over a long period of time. Yes, it happens in the same direction, but the quantum is very whimsical. And crude itself has been a little bit of up and down. Of course, in the recent past, it has come down. So I would say the raw material basket as we see now in Q4, which is flattish vis-a-vis Q3, and Q1 where we have decent visibility is also going to remain flattish vis-a-vis Q4. Post that, depending on the situation of the crude and demand scenario in China, in Europe, in US, in India, we may see some tapering of raw material prices, but we'll have to wait and watch.
Hi Arnab, morning. This is Shrishti also joining in. But Arnab, with increasing competition in the industry, the price hikes have remained modest. How do you plan to navigate this challenge, and could you share your segment-wise pricing strategy?
So in some segments we take price hikes on our own. You can call it a price setting strategy. In many segments we are price followers depending on what competition is doing. For example, in truck bus, radial truck bus bias, we are price followers. In two-wheeler, sometimes we do price setting. In four-wheeler, where it is where it's a multi-cornered competition, highly competitive market, I would say each player has some degree of pricing independence. So we are neither price setters nor price followers there. And our strategy in the recent past has been to take frequent price hikes of very small quantities so that we take our margin up gradually from the current 35-36% level to about 40 to 41% level, where we find ourselves to be a little bit comfortable. So still some 4 to 5% gap has to be bridged, which we plan to do over a period of time.
Right. Your company actually reported about 8% year-on-year volume growth in the first 9 months of this fiscal year. Should we actually expect a similar or a better performance when you talk especially only about Q4?
Q4 consists of 2 months which are down markets in terms of seasonality because of cold weather in north and east parts of the country, which leads to a sharp downward demand change. And this starts from November, December of Q3 and continues into January, February. However, March to June is the upcycle. So March is also in quarter 4, which may see a good demand. So overall, I would see not a big difference vis-a-vis the ongoing trend in terms of top line growth.
Right. So given Ceat's presence in the US market, how is it that you see the ongoing tariff-related discussions, and could this really impact your business?
Yeah, so we have just started getting into the US market. We are there with a small presence in OHT and agriculture radial tires. We are very small players yet, but we are growing very fast because of our small base. Optically, we have just introduced passenger and TBR tires. So yes, any change in tariff would have some impact on our volumes in US, but since we are sitting on a very low base, it is not going to be very material in the coming financial year.
But I know between Europe and the US, which region presents stronger growth opportunities for Ceat in the near term? Give us some sense there, and also which segments are expected to do better?
For Ceat, Europe is definitely better in the near term, just because we have launched our products much earlier in Europe, and we have market access in Europe through a distribution network, which we are now trying to build in US. So it's just for that reason and not for any other reason that we expect robust volume growth in Europe as compared to US, where we are still finding our feet.
Right, and lastly, actually, it's been 100 years for your company, Ceat, and I just wanted to understand and try to gauge from you going ahead, how would the next few years be for Ceat, and how different would it be from the past?
So future is going to be very dynamic in the world in terms of demand, in terms of evolving customer trends across the globe. I'm emphasizing globe because with the acquisition of Camso, about 25% plus of our business is going to come from outside India. And Ceat has to be very, very agile and dynamic in terms of right from procurement to sales, including technology, marketing, and all aspects of the supply chain. We are very surely going to double down on innovation in all parts of our value chain.
All right, Arnab, with this, we let you go on that note. Thank you so much for taking the time out and speaking with us and giving us some sense that what this foray into the premium tire category means for Ceat and the industry overall.
If you like this video, then like, share and subscribe to ET Now.